The ongoing Russian-Ukraine issue, Germany has halted the certification process for the Nord Stream 2. NBC's Peter Alexander is here with all the updates.
There's no question that Russia is the aggressor.
Announcing the promised punishment after Vladimir Putin recognized the independence of 2 pro-Russian areas in eastern Ukraine and deployed Russian forces there.
I'm announcing the first tranche of sanctions to impose costs on Russia and will continue to escalate sanctions if Russia escalates.
The U.S. slapping those penalties on 2 large Russian banks and on Russian debt, which the president says means Moscow can no longer raise money from the U.S. and Europe, and also sanctioning several Russian elites. The president not mincing words.
This is the beginning of a Russian invasion of Ukraine.
That after backlash over the White House's reluctance to call it an invasion.
Who in the Lord's name does Putin think gives him the right to declare new so-called countries on territory that belong to his neighbors? This is a flagrant violation of international law.
But critics say the president's moves don't go far enough. Republican Lindsey Graham tweeting President Biden is not seizing the moment. The sanctions outlined are woefully inadequate to deter Putin's efforts to redraw the European map and dismember a neighboring democracy. Former President Trump also blasting President Biden while praising Putin's justification for his move.
I went in yesterday and there was a television screen and I said, this is genius. Putin declares a big portion of the Ukraine. Putin declares it as independent. Oh, that's wonderful. This never would have happened with us. Had I been in office, not even thinkable.
Meanwhile, the president is touting Germany's announcement that it will suspend approval of Nord Stream 2, the controversial gas pipeline between Russia and Germany. While in the U.S., gas prices that were already at an 8-year high are now spiking. California hitting an all-time record, nearly $5 a gallon.
I want to limit the pain to the American people are feeling at the gas pump.
Okay, well, of course, there will be more on that front. It's perhaps not ended yet. Dean Kim is joining us, Head of Global Research Product at William O'Neill. Dean, good morning. Thanks a lot for joining us. The global markets have seen a lot over the last 1 month or so. Do you reckon that there's more to go on the downside, or is there some sign of stability here?
Yeah, I think we should see more downside because there's a lot of moving parts, right? So if you look at what's going on with the Russia-Ukraine situation, what I'm paying attention now is what's going on with the oil price. Brent is spiking. We're at like $97. We're about to approach that psychological level of 100. Light sweet crude, we're at 91, also trying to make new highs here. So I think certainly oil price is going to spike, and that's going to have repercussions for many countries, emerging countries like India, South Korea, even Japan. They're net importers of oil, and that may certainly put pressure on the economy and as well as inflation. Because, oil, it represents about 26% of total imports for India, also represents about 4% of GDP. It may have a chance to kind of devalue the Indian rupee because of the trade deficit. If that were to happen, inflation might start spiking. So there's, certainly risks out there and that we're keeping a close eye on. But in our home in the U.S., we're kind of wait and see in terms of what the Fed's going to do, because, as you know, the Fed is very intent on raising rates for at least 3 times this year, 3 times next year. But given the tumultuous situation with Russia and Ukraine, we'll have to see what, if they were to backpedal. So a lot of moving parts here.
Absolutely, a lot of moving parts, and things are changing every day, right, Dean? Good morning. How are you looking at the charts of the S&P 500? Because now it's been 4 days running that the markets have closed in the red, and now the S&P 500 has moved into correction territory. It's down 10% from its highs. Is there more selling pressure underway?
Yeah, I believe so. Certainly we put the S&P uptrend under pressure just recently, and there's a fair chance that it's going to test the January lows that we've seen. And same thing with the NASDAQ. The January lows is a few percentage points away. Definitely we don't see any support until that point. So I believe we are going to test that eventually.
Dean, what about the US rates market on yields? Are we going to lurch higher once, many do believe that we kind of go back to that scenario. Geopolitics takes a bit of a breather and yields lurch higher. Is that on levels there? How are things looking?
Yeah, so the 10-year bond yield has kind of stalled. We're at around 1.9. We were on our way to move above 2.0. But because of the geopolitical situation, the 10-year yield is, kind of stalling or even retracting at the moment. But at the same time, the short end of the curve, 2 years, is rapidly rising. And so what we're seeing is compression of the yield curve. So 2 to 10-year yield gap, we're sitting like 45 basis points. We were well above 90 just a couple of months ago. So if it keeps heading in that trajectory, then the bond market is kind of signaling for a major slowdown in the US economy. And so, if that were to happen, then I think Fed will need to kind of adjust their trajectory in terms of where the rates are going. But at the moment, certainly the yield curve is compressing.
Okay, Dean, you do track some of these Indian stocks. What have you made of the recent fall in the Indian IT stocks?
Yeah, a lot of stocks are under pressure in India, including our focus list. We have many names in the focus list, but we are facing with a lot of failed breakouts, including some of the tech names. So I would say, stay patient. Even though they are failing in terms of the breakout, they continue to be in consolidation mode. So if they were to hold their 200-day moving average, then I think it's fine. We just need to take a sort of a patient approach to things and not add to position unnecessarily. Wait for proper technical setups. The Sensex, I'm looking at the chart recently, and it's amazing. Today it caught support right at the 200-day moving average. That's great sign. It's great to see that. Let's hope that the index can hold that 200-day moving average. I think we just need to take a sort of a patient approach at the moment.
So if the Nifty and the Sensex manage to hold on to the 200-day moving average and move forward, if there is a recovery in the market, what are the stocks that you track in the Indian markets that could lead it upwards?
Yeah, so certainly the cap equipment and basic material names continue to look good in India, even now. So some of the stocks like Blue Star, Linda India, Polyplex, Siemens, these are all sort of cap equipment, basic material names that continues to look really good. There are pockets of individual stocks like Sun Pharma just breaking out. That looks interesting as well. But I think the consumer staples, they are making a comeback. So Balrampur Chini Mills, that one looks particularly interesting. And lastly, of course, the Oil and Natural Gas Corp of India, that continues to be very strong. So I think it's just pockets of individual stocks, nothing, with the exception of cap equipment and basic material that's on trend. Everything else is sort of individual opportunities.
All right, Dean, we'll leave it at that. Thanks a lot for joining us, and we will again, touch base with you in future for sure. Well, that's the technical setup of the market. Let's slip into a short break. All eyes on the market opening today, which suggests that after 5 days of a sell-off, finally we'll see some green on the screen. Looking forward to that, perhaps, if you're a bull. Our list of top 10 stocks is coming up in just moments from now. Stay tuned.